Today we're looking at XRP, Ripple, cryptocurrency analysis and prediction. Welcome back to Crypto Cash, your one-stop shop for cryptocurrency analysis. Before we take a look at XRP, please consider subscribing to get notified as soon as these videos are released. This gives you a head start so you can effectively plan out your trades and make an informed decision. I have years of trading experience and my goal is to share my knowledge with the world, so thank you for tuning in. I always like to start off with the fundamentals and dive deep in the technical data. I also provide you with action plans for the future so you know what I would do in each scenario as a day trader and a swing trader. So be sure to stick around to the end for my recommendations, and please note, this is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. XRP is both a cryptocurrency and a platform. The company and network platform are typically referred to as Ripple, and XRP is considered a currency itself. XRP was created by Ripple to be a speedy, less costly, and more scalable alternative to both other digital assets and existing monetary payment platforms like SWIFT. Max supply, 100 billion. Circulating supply, 45 billion, presently at 45% total. Market cap of $48 billion and a 24-hour volume of 37 billion. Today's high is $1.48. Today's low is $1.03. That's an increase of over 35%. Ripple is consistently making higher highs, followed by short consolidation periods. This is the second price spike in the past 6 days alone. The volume is great for day traders, and volatility is fantastic for swing traders as well. Tons of opportunity, you really just need to know where to look. This is a good start in the right direction, right? Which is why we're here in the first place. Current resistance level is $1.48. Previous resistance, turn support, is $1.38. Bear in mind the support level has not been tested since the price jumped above. And now for the technical analysis. For my day traders out there, taking a look at the 15-minute chart, you can see the 50-day moving average is currently working as a support level. It will get tested again soon, so just make sure to see if it holds. The 100-day moving average, however, will not be tested for a few more hours, but it was previously a support level. The RSI is presently oversold at approximately 70, but it is still in the decline. The MACD also indicates it might have its peak recently, but this implies the price movement could be shifting. Pay close attention to this as well. The VWAP is also holding, but it's currently overextended, so we can expect the price to recover some until it catches up. So now let's go ahead and talk about my action plan for day trading. If I was feeling bullish, I would wait 30 minutes after the currency is still respecting the support level of approximately $1.38. I would also see how the price reacts to the 50-day moving average and the VWAP. If the price stays above, I would add to my position and consider it being a very short-term trade. I would also only stay in if the RSI was under 60, which it is currently not. If I felt the price is going down, I would pay close attention to the support level and see if it gets tested. If the variance is large enough for it to break and stay below, the previous support level is now a resistance. Once this is identified, I would look at the RSI oscillator and see if it's considered overbought. Typically anything under 45 is a good entry point. I would also remember to check the MACD just to see what the trend is there and if it's gaining or losing momentum. I would also remember to average down by selling small portions of my total so I can take profits whenever possible in case the price corrects itself. For my swing traders out there, looking at the 4-hour chart, you can see the higher highs quite easily. It's pretty obvious there was only one red bar that closed in the past 24 hours. This tells us some momentum is still trending upwards. The RSI is overextended, so I would not consider that a positive technical sign to go long. I would like to note, however, that the MACD is giving us a buy signal. All in all, the price action seems to be pretty good. Another thing to recognize is the pattern that previously occurred. The bull flag pattern you see previously means nothing until the recent price action indicates similar movement. So just be mindful of that. It is too early to speculate that this will happen. However, history has a tendency of repeating itself, especially in cryptocurrency. So just be mindful of the 4-hour chart and pay attention to see if the price movement over the next 24 to 48 hours looks similar to the pattern highlighted on the chart. If it starts making a similar pattern, you might want to position yourself for a long-term trade. Me personally, in this situation as a swing trader, I would wait for the price to drop a little bit more if I was planning to go long. The reason for this is because the RSI is still at its peak. I only prefer to take long positions when the RSI is under 70. 60, 50, 40, anything like that is even better. Now, even though the MACD looks good, I would prefer to invest when I have at least 3 indicators present. Now, if I was feeling bearish, I would wait until the RSI is overextended, maybe in the 80s, and the price hits the resistance level and holds for just say 2 15-minute red bars. Then I would consider a short-term trade. Now, when I swing trade, keep in mind I'm always going back and forth between the 15-minute and 4-hour time frames, just so I can get perspective on both and see what the best entry is. Because there's a lot of little indicators you can pick up on for different time frames that work very well in situations like these. Now, once I get, just say, both indications of a sell signal, I would only put in about 20% of my trade position until I keep getting confirmation it's moving down. As it confirms, I add more to my position. You'll learn this about me. When I short, I always like to sell in small positions approximately 20% of the time. So I go in 20, I add 20, I add another 20, and then I go all in once it's confirming with all the signals I need to show me what's going on. So this just ensures I'm always profitable. It works well for me because I've done a lot of all-ins before in the past, and it really just, it's a 50-50 gamble, and I don't like to gamble anymore. And I can confidently say that taking smaller positions is going to help you a lot. There's going to be times when you're going to miss out on some opportunities. Sure, that happens. But it's a lot better to miss out on small opportunities here and there instead of taking big losses more frequently. Please understand that. Unless you're going to hold on for dear life, there's no reason to go all in. Now, again, you're going to hear me say this as well. Can't stress this enough. Set a target and stick to it. If you don't have a target going into your swing or day trade, you may as well be just shooting an arrow straight up into the air and waiting for it to come back down. You never truly know what's going to happen. So get out and take your profits while you still can. Heck, even get out and take a freaking loss. That's okay. Smaller losses, the better, right? So just please consider everything I've discussed with you so far. And obviously, please like and subscribe if you did find benefit from this. I hope this finds you well, and I want to wish you the absolute best luck on your trades. Please let us know your thoughts too. If there's anything else I can do to improve, curious what kind of positions you're holding too, please comment below. Let us know. Let's get engaged. Let's build together our wallets. Let's get that green, fat, stacked wallet. Once again, thanks so much for watching. We'll go ahead and see you again in the next video. Take care.